Inventory is finally increasing. Buyer demand has decreased 2 consecutive months. Is this the end of a good run, or do we continue to see real estate appreciation? That's what we're going to cover in this monthly market report. This is for you if you are a real estate agent or financial advisor interested in market data to help you advise a client, or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data you need to make an informed buying or selling decision, or help your client do the same. We'll start with a quote from the Zelman June broker report, and it says, this month's overall home buyer demand rating equaled 86 on a 0 to 100 scale, down from 88 last month and marking the first sequential decline since November. So this is important because we're seeing buyer demand start to wane just a little bit. Now, I'm not saying that we're in bad shape. It's quite the opposite right now. You can see visually here, we're ahead of where we were over the summer of last year. And we know that we packed a ton of business into last summer coming out of the lockdown. So it's an important point to start to notice that we are seeing buyer demand wane, but I'm not saying there isn't buyer demand out there, because it is out there. But the reality is that we are now beginning to see the buying frenzy that resulted from the pandemic begin to taper just a little bit. What exactly are the factors contributing to this? Well, that's exactly why there's nothing to be concerned with. The reasons are perfectly natural, and they're as follows. 1, record price appreciation. 2, extremely low inventory. 3, record high percentage sales over list price. And 4, record low days on market. All of these factors are likely to discourage home buyers. Now, if you are a potential buyer, don't interpret this as a signal for you to lay low and wait. On the contrary, stay tuned to the end of this video where I will speak about appreciation over the next 5 years that is being forecasted by experts and how far they say you will be left behind if you don't buy now. American home equity has skyrocketed. This is the latest data from CoreLogic. The average gain in equity on a mortgaged home over the past year has been $33,400. The average amount of equity on a home with a mortgage is a staggering $216,000, and that's a tremendous amount of equity in homes across the country. 38.2% of all homes are owned free and clear, and we know that almost 20% is the equity growth over the past year. So what are experts saying about sellers right now? Let's start off with First American. It looks like existing inventory is starting to inch up, which is good news for the housing market, parched for more supply. House says this: we're seeing another significant week-over-week gain in inventory. This is great news for buyers. And the chief economist at the National Association of Realtors said this: supply is expected to improve, which will give buyers more options and help tamp down record high asking prices for existing homes. By the way, here is the latest update with regards to inventory from the National Association of Realtors. Clearly, inventory levels are rising across the country, but what's interesting and what this chart doesn't tell you is that market velocity has not changed. We're seeing days on the market remain the same. So we're still in a very, very quick moving market, but inventory is now beginning to rise, which is a very good thing for the health of the market. So as we start to look toward the second half of the year, let's talk about some forecasts. Firstly, we'll start off with mortgage rate projections. The quick answer here is that mortgage rates are projected to go up. By the middle of next year, the average of these 4 forecasts is about 3.5%. Is it going to be a little bit higher, a little bit lower? Time will tell. The only question really is, by how much are rates going to go up and when? Certainly, if you're working with somebody who's buying right now, help them understand that the forecast for rates is up. It's going to cost more in the future to borrow the money to buy a home than it does today. So what about prices? Let's look at the most up-to-date forecast for prices going into the second half of this year. The average of these 5 forecasters, Zelman, Mortgage Bankers Association, National Association of Realtors, Fannie and Freddie, is 8.9%. Now, you've heard me say this before. The one thing that all of these forecasters have in common is every one of them has raised their forecast as we've progressed throughout the course of the year. When we started off this year, the average of these forecasters was about 5%. And really that was based upon more inventory coming to market, which has not happened. And they've up-leveled their forecast, knocking on the door again of another year close to 10% appreciation. It's very likely that they would upgrade their forecast as we go throughout the rest of this year. And it's all going to be dependent upon inventory. So let's talk about forbearance. Forbearance has dropped down again, this time to 3.93%. And that's important to look at because as we think about that, forbearance right now is something that people will be affected by, but certainly do not expect a wave of foreclosures from people coming off of forbearance. Black Knight released a study over the last couple of weeks showing that 96% of people have at least 10% equity. And I want to break that down for you real quick. Here is the share of mortgages in forbearance with less than 10% equity. 4% based on the current loan to value. If you add 18 months of deferred interest, that rises to 9%. And if you add in 18 months of deferred principal and interest, that rises to 13%. So in the best of cases, 96% of people have at least 10% equity. And in the worst of cases, 87% of people have at least 10% equity. Whichever it is, that's a lot of equity. And such people can easily sell their home, put a little money in their pocket, and get to the other side of a financial crisis if they're in one. This is the primary reason why those calling for a housing crash are wrong. And I think this is something that they simply don't understand or just choose not to see. Now, the one area that certainly could correct itself is the second home market. Now, let me break down the data for you. And by the way, this is from Zelman and Associates. This is a look at how the second home market surged in 2020. On the left, you see primary homes. In the middle, you see second homes. And on the right, you see investment properties. Now let's focus on second homes. In 2019, the second home market grew by 2%. In 2020, the second home market was actually forecasted to constrict just a little bit, and yet it grew by 27%. That is a massive outlier. I'm speculating when I say this, but these are most likely people that escaped an urban core during the pandemic, and now with life getting back to normal, they may consider going back to their old home, leading them to sell their second home. If you're a realtor and you sold a second home last year to a client, I would be making a phone call to that client to see if they would be interested in selling. It could be an opportunity for additional inventory to be brought back to market. Now, if you're a buyer and you made it to this part of the video, good for you, because we're about to look at what's at stake for you if you don't buy now. According to the Home Price Expectation Survey, the forecast for housing for the next few years is very, very good. They're forecasting this year almost 9% appreciation, a little over 5% next year, and then getting into more historical normal appreciation levels in the years following. By the way, the historical average appreciation in this country has been about 3.8% on average per year looking back over time. So what do we see here? Well, somebody buying a home today, the appreciation they stand to earn is significant. On an average price home, a $350,000 home, the projected equity growth over the next 5 years is just over $93,000. That's what's at stake. Not to mention all the non-financial benefits of home ownership that we know. The ability to earn and grow equity, almost $100,000 of equity in the next 5 years, is significant. You know, that may be the conversation to have with somebody that's in a situation where they're getting frustrated and they're saying, you know what, I don't know if we should continue to look for a home. There's no inventory, we keep getting outbid. If they want to pause their search, that's fine, and that might be the best thing for them. But we want to also show them what's at stake right now so that they can make an informed decision. So that's a wrap for the July monthly market report. I appreciate you listening in. Forward, subscribe, share. I'll be back next month. But before you go, if you're looking to purchase or refinance or know someone that is and would like a no-cost consultation with me personally, feel free to reach out and I'll be happy to analyze if your debt is structured in the most optimal way or if there's room for improvement. Thanks again for watching. Bye for now.